What is going on, Patreon? Welcome to the post-market analysis for March 13th, 2024. This morning wasn't very eventful at all. So we saw these Friday NFP highs here on the S&P 500, right? With the Dow Jones, right? The Dow Jones taking out those Friday NFP highs. So today we anticipated potentially, right? We seen higher prices yesterday, a strong bullish move yesterday over 70 points. We're anticipating the continuation from yesterday's move, right? Continuation higher from yesterday's move to get up into these NFP Friday highs with the Dow Jones, because the Dow Jones now has reached up into those prior weekly highs now. So that's what we're anticipating this week, right? So that's what we're looking at on the daily time frame here, anticipating that continuation to the upside after such a strong rally move higher from CPI. So coming down to the H4 time frame here today, this morning, we had this bullish fair value gap, right? So this morning we're anticipating price action to pull back into this bullish fair value gap and then potentially find support to then see that rip higher up into that buy side liquidity, right? So that was the overall game plan coming into the market this morning, right? Because as you can see yesterday, we kind of had this strong move higher. We're anticipating this morning to see some type of correction, right? Before an expansion, right? The market is a stream of expansions, corrections, expansions, right? Expansion, correction, expansion, right? That's the what makes a bulk of the market, right? Expansion, correction, expansion, correction, expansion. We're anticipating a slight correction into this bullish fair value gap, and then it finding support here to then see that continuation to the upside, take out this buy side liquidity with the Dow Jones, right? So as you can see, we marked out our PD array and we're anticipating price action to pull lower, right? As well as we did have this last down close candle, right? High, low, higher high, right? High, low, higher high. As we break through this low, price action should genuinely see resistance at this low, right? As we break through this low, this is now a some would say support broken turn resistance, right? So this level would be then a resistance to see that push lower, and that's what we're anticipating this morning, right? We're anticipating this level to be a resistance to see that push lower down into that support level that we were talking about, right? That H4 fair value gap. So overall this morning, even though our bias was higher prices back up into this buy side liquidity, we were anticipating a short, right? And this is why it's important to understand where you are in the marketplace. Even though eventually we want to see the market go higher, right? We can still take a trade on the short direction if that's what the market is presenting us, right? Because what could happen is, let's say the AM session dropped lower, right? But my bias is higher, right? Am I really gonna avoid the entire drop lower in the AM session to then catch the move higher in the PM session? No, I'm gonna, even though my bias was higher prices, if I'm seeing the opportunity in the marketplace as of now is showing me lower prices, I'm gonna most likely take the short, right? And this morning we're anticipating, price action having this S&T divergence at these highs here. Nasdaq take out these highs. I'm pretty sure Dow Jones. So it was right here at like 3 a.m. Yeah, Dow Jones was like down here this morning. So we're anticipating that SMT divergence, which eventually did fail. That SMT divergence eventually did fail, but overall, the market this morning when we were doing our pre-planning, right, it overall was leaning more so towards the downside, reaching down into these bullish levels, right? As well as we do have this balanced price range right here. This U-shaped formation, right? This U-shaped formation, strong move to the downside and then harsh move to the upside. This U-shaped formation right? This bearish fair value gap extended out is our balanced price range, right? And eventually even down here into this last down close candle, right? Balanced price range plus order block, right? So so overall this morning, we did have this fair value gap here, right? We were overall anticipating, right, price action finding rejection at this bearish fair value gap to then seeing that overall rejection lower and price action for the continued move to the downside into the support level. So that's what we were looking at this morning for the M15 time frame here, and coming down into the actual marketplace, uh, coming down into 950 when we started trading, we got this small little fair value gap, which we did take a short based off of, right? We did take a short based off of right here, and pretty sure 5 points. Yeah, and we did get out for about 4.25, right? So 4.25 loss. So not a 5 point loss, just a 4.25 loss, right? We're anticipating price action to find rejection off of this bearish fair value gap to then come down here into that support level. Um, it is unfortunate that we did have a poor stop loss, right? I haven't, traded in a week, right? That trade management, you got to get back into the flow of things, right? Usually what I would do is I would go in less risk but a bigger stop loss. So I do something like this, right? Have a bigger stop loss but use less risk, and as price drops lower, I'd scale in. But even if I did that, it still would have lost, right? So overall today was just you know, no matter how you played it, whether you took longs here, right? Because if eventually price action did take out this low, right? Price action did take out this low right here, and we did get this last down close candle. So right here, so this last down close candle on the M15, right? Remember the order block theory. So last down close candle on the M15. Actually, let me extend it out even onto the M5, right? These last down close candles, right? These last 3 down close candles, right? This is pertaining to that order block theory. So, okay, you would have gotten 10 points. So this probably would have been the best opportunity this morning, which would have netted you about a 2R up here. So about right here. So this was probably the best opportunity this morning, right? Obviously, we have this liquidity sweep of the Asia session lows, last down close candle. As price was hovering around this last down close candle, it was not actually breaking this low, right? Just overall showing you guys, right? The power of, these PD arrays, right? Even though it's hovering around, playing around, it never really broke this low, and eventually held to go back higher. But after that first loss, right, with the fair value gap, I did see the order block trade, and I was looking at it, and maybe it could play out, but instead of taking a trade, I just walked away, right? Because Nasdaq was consolidating. Nasdaq went sideways the entire day. Nasdaq was going sideways the entire day. Dow Jones was not pretty at all. Dow Jones looks disgusting, right? And I just walked away. I literally just walked away because this is just walking away is more important than taking a trade, right? Understanding where you will fail at as a trader, and then having the discipline to just step away and understand I'll just come back tomorrow is way more important than taking any single trade, right? I think that's more important than taking a winning trade. I generally think having discipline to walk away and not take a trade despite you quote unquote thinking there's going to be an opportunity when you know there isn't is more important than trying to trade, right? The goal of trading is to catch good trades, right? When the market is presenting good opportunities. It's not to trade every single day because not every single day will present an opportunity. It's when the days are presenting an opportunity, you maximize on those opportunities. And when it's not presenting a good opportunity, you you either don't trade that day, or you understand that you're more susceptible to taking a loss this day and then walking away, right? It was very good that I did cut my losses short here. Like, that was very good. But I want to reach a point in my future, right? Because I'm still developing as a trader with you guys, right? I'm still, being, best trader I can be, right? It's a never-ending journey, a never-ending you're never ending student of the marketplace, right? I eventually want to reach a point to where eventually I can notice when I'm in a losing position like this, and then being able to get out, break even, right? That, I think that's the best place you can be as a trader, is when you've experienced the marketplace enough to know when you're gonna lose and just get out with the least amount loss possible, right? And then knowing when you're in a really good position and then maximizing ultimately on that winning position, right? I'm getting better as a trader, cutting my losses shorter and shorter, but I eventually want to reach a point to where it's like my losses compared to my wins are like 4R or 5R, right? Right now I'm at a 2.7 to 3R. I want to eventually reach up into that 4R, maybe 5R range. So, obviously that takes time. That takes looking at the markets every single day. That takes, doing these analysis where I can get better at, where I'm struggling as a trader, how I can discipline myself in the charts as well as outside of the charts to make sure my mind is mentally focused, right, when I'm coming into the markets and being the best trader I can be. So overall today we just accumulated. This morning session was back and forth, and we didn't actually start moving until the PM session. And then last hour of trading, we just seen this massive spike lower for over 20 points. And it's very annoying when this happens, right? It's very annoying when this happens, when we just get a massive spike lower, like when the market's about to close, when and the market just does nothing all day. But that's just how trading is, right? It the trading, conditions change all the times. The price action switches up. Sometimes it's weird like this, like it consolidated all day, up, down, up, down, up, down, and it wasn't until the last hour, the literal last like 40 minutes of trading, does we see a move. And that's annoying, but it is what it is, right? I'm glad that I was able to understand the market was gonna be really piss poor today and got out where I got out, and and not allow myself to, like, some traders, go on to and hurt themselves even more, right? Because these are days where a lot of traders can really hurt themselves, right? When the market's just stuck in a range, they try to push it and push it and push it, and the market is just not pushing, and they can hurt themselves really badly. So understanding, when the market's gonna be in these type of conditions, right? How did I know, right? The divergence, right? Nasdaq was going lower, but the Dow Jones was pushing higher, and the overall consolidation, lack of volume, that was a big one, as well as the unwillingness to, move, right? The unwillingness to move, the back and forth, whipsaw action, unwillingness to move, right? So lack of volume, divergence between, Nasdaq, Dow Jones, and even the dollar, right? The overall divergence and the overall whipsaw back and forth wiki type of price action, right? No real direction, just back and forth. So being able to identify that, I was able to actually step back and understand this is not a trend condition that I can trade in, and I'm just going to walk away and come back tomorrow, because I understand that if I cut my losses short now and keep my loss small, if tomorrow presents a great opportunity, I can, triple, quadruple, fifth, triple, however much I lost today. Looking at the dollar here, we were we're talking about this bullish fair value gap here, this last non-close candle, and seeing how it reacted. It did give a rejection, right? It did give a rejection here, but overall, it's not really enough, right? Dollar is still back and forth, right? There's no true direction with the dollar right now, whether it's gonna go higher or lower, right? We did see yesterday we did have this CPI hike being created, right? And so far we did break below that CPI low, which is very good for bearishness, right? That's very good for bearishness, but we are holding inside of this H4 order block. So it's, I talked about this, right? It's just seeing how does the market react at these levels, right? If we can break below this H4 order block, there's no doubt that we can go down here into this rejection block here and eventually down into the sell side liquidity down here, right? Actually, is this a rejection block? No, this is just a regular low. Nah, this isn't a rejection block. That's just a regular low. So we can anchor this right here. So we have this long wick as well as this low, right? So if we can break below this last down close candle here on the H4, we can see that pullback here and then reach down into that 50% of the long wick and eventually take out that low as well. So but it's not until we actually do break below that support level, right? Even though this is very good that we broke below the CPI low for bearish prices, right? We still have measurement of support that we have to get through, right? It's just like the analogy like fighting an army, right? Um, your target is down here, right? So this is the king, right? So let's say you're an army and you're trying to take down an evil king. So this is your target here, the evil king. But before you can get down to this evil king, you have to get through this last down close candle, this 50% wick, right? So it's not until we get through these levels can we be confident that we're going to take out the king, if you guys get that analogy. And for GU and EU, we're anticipating higher prices, specifically on GU this morning. Yeah, morning, this morning, around like, oh shoot, 1 hour. Yeah, right here at this last down close candle here on the 1 hour. Yep, this morning right here. We're anticipating price action finding support here at this last down close candle on the 1 hour. And it kind of just consolidated today. It didn't really do much. Back and forth, back and forth, back and forth. Yeah, so it didn't really do much, but it did uh it did find support, right? It did hold inside of that last stop close candle we did mention, right? Because um we're anticipating the dollar to push lower into that last down close candle this morning, right? We're anticipating the dollar to break lower into that last down close candle this morning. So with that, we're anticipating, right, GU and EU pushing higher, right? With EU being all the way up into these highs, but GU down here, we're anticipating that sixth sister for GU to eventually catch up. So that's what we're looking at this morning. And on gold, we're looking at gold here. Pretty sure we had a last down close candle here. Let me see this morning. Yeah, we had this H1 last down close candle, which price action almost got down into. It actually got down into the opening of this fair value gap here. As you can see on gold, it came down into the opening of that fair value gap. It didn't necessarily get into this order block. It kind of just got into the opening of this bullish fair value gap, and then it kind of just left. So seeing price action come down into the opening of that H1 bullish fair value gap, and then seeing that push higher, right, this morning, seeing that push higher, you could have taken a trade here inside of this bullish fair value gap, right? If you watch that fair value gap masterclass video, your stop loss below here. Actually, no, below here, because this is the 3 candlestick formation, this low, this middle part, this high. So stop loss below this low. Probably target back up here. So this would have been your trade idea for gold this morning, right? Seeing price action come down into that H1 fair value gap opening and then leave it, anticipate that pullback, into this area of the bullish fair value gap for that continued move to the upside, with the dollar going lower this morning. So that's what we were looking at, So that's going to be, the post-market analysis for the overall markets that we did a pre-market analysis to. Hope you guys learned a lot from this. Hope I give you guys enough value from this, and I'll see you guys tomorrow morning. Peace out. I'm Marco.